calculating the correct lot size for your trades is vitally important to your trading success. It can make or break you as a trader. Let's talk about that and more right now. Hey there traders, it's Andrew Mitchem here at the Forex Trading Coach with video and podcast number 494. So, a lesson for you for this week. I was approached by somebody via email a couple of days ago, not a client, and he said to me, Andrew, can you help me out? I'm really struggling with my trading. And he was just tearing his hair out, couldn't really figure out what was going wrong. He had a low win rate and was just losing trade after trade. And I said, look, show me some of your trade results, maybe like export your trade history through to me, and I'll take a look at it for you to see if there's anything obvious I can see to assist you. Now, the thing that stood out so obviously, and of course I didn't know his strategy, I didn't know why I was entering the trades or anything like that, but the obvious thing, the first thing that I looked at is that every single trade that he was taking had the same lot size. And he was just placing 0.1 lots. And he was just placing on every single trade. It didn't matter what the currency pair is, what the direction, what the stop loss size was, or even different markets. Every single trade had the same 0.1 lot size. And I went back to him and said, here's an obvious flaw in your trading, because have you noticed that some of your losses are enormous and some of your gains are really tiny? And when you have losses, they're all over the place. There's, some big losses, there's some smaller losses, and same with your gains. You might have a profitable gain, but it's tiny and compared with the loss that you've just taken on the last trade. And he said, the reason I do that is because it's easy. I put 0.1 lots on every trade. And I said, so what's your reasoning, apart from being easy? And he said, well, that's all I've ever thought to do. And I suppose it's easy. And when you look online, people calculate their pips and they think that they're doing well if they have positive pips. And he just put the same lot size on every single trade. So I said to him, look, here's the first thing you can do. Go to my website and download my lot size calculator. It works on MT4 or MT5 and it's freely available to you. And if you don't already have it, I strongly suggest if you use the MT4, MT5 platform, you go and download it. It's a script and it's been downloaded tens and tens of thousands of times over the last, probably been on my site about 12 or 13 years. Now, unlike some calculators, which are really slow and cumbersome to use, this is fantastic. It's a script and all you do is drag it onto the chart that you are trading right now. So let's say you're trading the Euro US dollar. You drag the script on. The script knows your account size, the balance. It knows the denomination of your trading account, such as if you're trading in US dollars or yen or New Zealand dollars or pounds, whatever, Canadian dollars, whatever it is that your account denomination is, it knows. And all you're doing, because you're dragging it onto the Euro US dollar chart, it knows you're trying to trade the Euro US dollar. So therefore it knows the dollars per pip that you get paid on that particular pair in your currency of your account. So all you have to do is put in the stop loss size in pips of that trade. It's defaulted to 0.5% risk, but you can make that anything you like. But all you do is literally put in the stop loss, press OK, and it will tell you the exact lot size that you need to place on that trade. So that if that trade goes wrong with the stop loss size that you've just told it, it will lose the default 0.5% of your account on that trade if that trade were to go wrong. It's so easy. It literally takes like 10 seconds, if that, to calculate it and to use it. And it tells you the exact level you need. Very, very clever piece of software. Highly recommend it. And what that will do, and I told this guy what it will do for him, it will mean that every single trade that you have will have, a losing trade will have the same risk level, the same percentage risk or the same monetary loss if the trade goes wrong. So it doesn't matter if you have a trade on the Euro US dollar with a 30 pip stop loss, or a trade on the euro US dollar with a 120 pip stop loss. It doesn't matter, because every trade you will have equal and controlled and low and known risk. Really important you do that. So you're out there looking for a really top quality broker, and you're after an MT4 or MT5 broker out there. I can highly recommend Blueberry Markets. They're based over in Australia, across the ditch from me. I'm in New Zealand, but you can open an account with Blueberry Markets. Doesn't matter where you live in the world. There's a few countries you cannot. Unfortunately, the US is one of them, but there's a few other countries. But for the vast majority of people listening to this and watching this, you can open an account with Blueberry Markets. I'll put a link to them on this page and on this post, as I will do so you can go and get a freely available my lot size calculator script. Do both. Have a look. They'll be on this page. So if you would like me to discuss anything like this, just like this guy did this week on future videos and podcasts, if you have any trading issues or any difficulties, anything you don't quite understand, all you need to do is send me an email to andrew@theforextradingcoach.com, or leave a comment here if you're watching on YouTube or any other platform, and I will definitely help you out by making a future video and podcast about the subject that you need help with to help you out the best I can. So once again, this is Andrew Mitchem here at the Forex Trading Coach. I'll see you this time next week. Bye for now.